everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, boom! The thunderstorm hit like an Evergrande ton of bricks. Talk about the risk with Evergrande in our weekend update. But Elliott Wave has absolutely nailed this market. So the question obviously is, where do we go from here? Well, let's take a look at the charts. At the time of this recording, it is 10 p.m. on Monday evening, and the futures are currently up 14 points, so trying to bounce back a little bit from that massive thunderstorm we had in the markets today. I'd like to point out that way back in July, on July 10th, we first started talking about this Elliott Wave level just below 4,600, right after we passed through 420. Our thumbnail was Elliott Wave Grand Slam. There were 4 different Elliott Wave patterns, all giving us the same target. Then we reiterated it again in August in our Trade Finder. We made it the headline of our Trade Finder event. And then we reiterated this again in September 8th, when we talked about how there was a 5-wave impulse pattern within this Wave 5. All of those culminating right at the top of the target on that Wave 5, right where the doji is. So now we've moved to the downside, and we moved to the downside, breaking that 50-day moving average on pretty good size volume. So where do we go from here? Well, one other thing to take a look at, as even though we broke the 50-day moving average, we still didn't break out of that 1 standard deviation trend channel that has encompassed that entire Wave 5. Look at that. We hit the lower end of the channel on the low and closed with a doji. So are we going to bounce up and just fill this gap? Or are we going to bounce all the way back up towards the top of the channel? Or is this just a temporary stop, an oversold condition away from that 10-day moving average, and we're going to head lower from here? We've had S&P puts on in our portfolios for our subscribers, even to the point where our subscribers were questioning it when we're talking about when the market has these Elliott Wave targets. But you could see why we had puts all along, because if we break down like we did today on a gap down, there's no time to get in. So the puts that we have, which were obviously not doing well on the way up, all became profitable today, just in one fell swoop. And by the way, if you haven't attended a Trade Finder, I invite you to do so. It's free every Tuesday night at 9 o'clock. You can register at our website on ewotrader.com. We look at the markets. We look for trading ideas. We have a live Q&A. It's a lot of fun. So if you haven't attended, please do so. So let's take a look at where we can go from here. If we do break out of that standard deviation channel, showed this in the weekend update, the 38.2% Fib corrective level kind of coincides with this round 400 number and filling this gap all the way back from the very beginning of April 1st. So that could be a logical point. But again, perhaps we bounce up and fill this other gap first. We still are a little bit oversold from today. And then let's take a look at what happened with interest rates today. Nothing. This big move to the downside today, nothing happened. Interest rates were calm, and the dollar held in there extremely well. We showed this zigzag to the upside with the 100% extension, exactly where the dollar had closed. It tried to trade above it and closed dead smack even on the day right there at that 100% extension. Pretty surprising that no big movement out of rates, no big movement out of the dollar today. In the weekend update, I also mentioned that if we lost the SMH, if we lost the semiconductors, which have been a pretty good bastion of support or strength to the upside, even though they weren't getting any confirmation from the ADX, that was a hint there, I believe. And you can see there's a pretty significant downside today in the SMH. Was able to close dead on his 50-day moving average, so just hanging on a cliff there. And then last but not least, as we always show with the VIX, that is a breakout in the VIX. We've been talking about this descending triangle for quite a while. We said it remained intact because technically that breakout high on the 19th didn't take out the high from the 19th of July, but that is a clear breakout from this descending triangle in the VIX, and another indication that even a descending triangle doesn't mean you're necessarily going to break to the downside. You can break to the upside, just as we did in Bitcoin. Bitcoin pulled back a little bit today. We held at that all-important 44,000 level. Watch the last recording if you want more detail on that, but it was really important for Bitcoin to hold here and it did. So far so good for Bitcoin, but pretty rough day today. We'll see how things play out the rest of the week. Hope you found that informative. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.